The committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. Without objection, all members shall have 5 legislative days within which to submit additional materials to the chair for inclusion in the record. The chair now yields to himself for a brief opening statement. The committee meets today to consider 5 pieces of legislation, nearly all of which have earned bipartisan support and are largely aimed at creating a healthier economy for hardworking Americans. I thank all members of the committee on both sides of the aisle for working to bring these bills forward for action. Let me briefly review some of the measures. H.R. 1624, the Municipal Finance Support Act of 2017, is sponsored by our colleague from Indiana, Mr. Messer, and is co-sponsored by several members of the committee, including Mr. Holtgren, Mr. King, Mr. Poliquin, Mr. Ross, Mr. Delaney, Ms. Maloney, Mr. Meeks, Ms. Moore, Mr. Sherman, Ms. Sinema, and Ms. Velasquez. The bill would require federal banking regulators to treat certain municipal securities held by financial institutions as high-quality liquid assets. This change will protect financial institution investment in local communities by including investment-grade municipal bonds in bank liquidity buffers. Without this fix, critical local infrastructure projects could lack the financing needed to go forward. The committee will also consider H.R. 2864, the Improving Access to Capital Act, sponsored by Ms. Sinema and co-sponsored by Mr. Hollingsworth. This bipartisan bill will help small companies access capital and give small investors greater investment opportunities. The legislation will provide a useful tool for smaller reporting companies to raise capital from the public through a streamlined SEC review process. This is an important step toward lowering the cost of raising capital and fostering healthier growth in the American economy. H.R. 3110, the Financial Stability Oversight Council Insurance Member Continuity Act, is also on our agenda today. It's a bipartisan bill sponsored by Mr. Holtgren and co-sponsored by the ranking member, Ms. Waters, and several other members of the committee. The bill amends Title I of the Dodd-Frank Act to clarify the term of the FSOC's independent member with insurance experience. I'm also pleased that the committee will consider H.R. 3326, the World Bank Accountability Act, sponsored by Monetary Policy and Trade Subcommittee Chairman Mr. Barr. U.S. leadership means demanding results from development organizations like the World Bank and holding them accountable. In its oversight of the World Bank, the subcommittee has found the bank has fallen short in its important anti-poverty mission. The reforms mandated in this bill address institutional problems at the World Bank that have been documented by the bank itself. In addition, the bill would require the bank to strengthen its efforts to undermine violent extremism and would help prevent the bank from approving any assistance to a country designated as a state sponsor of terrorism. Finally, the committee will debate a resolution of inquiry being offered by the ranking member that I believe is frankly and regrettably a procedural tool that is blatantly political of nature, one that I do not necessarily consider to be worthy of debate, but we will debate it nonetheless. On this committee, there will be some who wish to focus on Russia and impeachment, but under my chairmanship, this committee will continue to be focused on America and a healthier economy, particularly knowing that the House Intelligence Committee, the Senate Intelligence Committee, the FBI, and the Special Counsel are already conducting the investigation, the subject of the inquiry. With that, I yield to the I yield back and I yield to the ranking member for an opening statement.
Thank you, Mr. Chairman. Mr. Chairman, several of the bills the committee will consider today are the product of bipartisan collaboration. I'd like to thank my colleagues on both sides of the aisle for working together on those bills to develop common sense solutions to improve our financial system. The spirit of bipartisanship must begin to extend to another area, that of holding President Trump accountable. So far, committee Democrats' efforts to scrutinize the financial dealings of President Trump, his family members, and his associates have not been joined by the majority. For example, in March of this year, I and other committee Democrats wrote a letter to the chairman requesting that given the Trump administration's serious conflicts of interest in the matter, that the committee assess the integrity of the U.S. Department of Justice's investigation into Deutsche Bank's Russian money laundering scheme and that the committee conduct its own investigation of that matter. That letter went unanswered. Committee Democrats want to get to the bottom of what Donald Trump is hiding when it comes to his finances. Why does Trump refuse to reveal his tax returns to the public? Why was Deutsche Bank, a bank that has been fined large sums for Russian money laundering and many other violations of the law, willing to lend hundreds of millions of dollars to Trump after his bankruptcies, when no other bank would lend to him? Why, according to press reports, have around 70% of Trump's real estate property sales over the past 12 months been too secretive, shell companies? And why is Trump sizing up the scope of his presidential pardon powers? The American public deserves to know the answers to these questions. Nearly every day, a troubling new revelation emerges about the president, his family, and his associates. As members of Congress and as members of this committee, we have an obligation to conduct oversight of the executive branch and of President Trump. To that end, I and other Democrats on the committee have introduced a resolution of inquiry directing the Secretary of the U.S. Department of the Treasury to provide any documents that the Treasury Department's Financial Crimes Enforcement Network has pertaining to the President, his immediate family, his associates, and foreign financial accounts, credit extended by or involving Russian banks or Russian government officials, money laundering violations of U.S. sanctions, the Foreign Corrupt Practices Act, or the Logan Act. I and other Democrats previously wrote to the Treasury Department to request information on Trump, his family, and his associates, but we've received no response. So I urge my colleagues on the other side of the aisle to join us in this effort and in our other efforts to investigate the financial dealings of Trump, his family members, and his associates. This is not a matter of politics. It is a matter of national security and the integrity of the presidency. So, Mr. Chairman and members, much of what I am asking for, all of it really, falls within our jurisdiction. And I'm sure there are those who are wondering why we have not stepped up to the plate and exercised our responsibility to get to the bottom of the finances of this president and his family, and many of his allies that have been involved with him in matters related to Russia. And so with that, I will yield the balance of my time.
Gentlelady yields back. A quorum being present, we will now proceed to today's business. Now pursuant to notice, I call up H.R. 2864. The clerk will report the bill which was distributed in advance.
H.R. 2864, to direct the Securities and Exchange Commission to allow certain issuers to be exempt from foreign registration requirements and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentlelady from Arizona, Ms. Sinema, to offer an amendment in the nature of the substitute. Does the gentlelady have an amendment at the desk?
Yes, Mr. Chair, I do.
I believe copies of the amendment have already been distributed and are on the dais. The clerk will report.
Amendment in the nature of substitute offered by Ms. Sinema. Strike all after the enacting clause.
Without objection, the amendment is considered as read and will serve as base text for purposes of amendment. The gentlelady is recognized for 5 minutes.
Thank you, Chairman Henserling and Ranking Member Waters, and thank you, Congressman Hollingsworth, for working with me on this bipartisan legislation to improve our capital markets and help more small companies succeed. As part of the Jobs Act, Congress directed the Securities and Exchange Commission to amend Regulation A to allow small companies to raise up to $50 million in offerings exempt from full SEC registration. These amendments, known as Regulation A+, exclude certain potential issuers, including Exchange Act reporting companies. As a result, thousands of companies that already meet the SEC's high disclosure requirements are ineligible to use Regulation A+ to cost-effectively raise the funds they need to grow and hire employees. This is why Congressman Hollingsworth and I introduced legislation to allow SEC reporting companies access to Regulation A+, a valuable pathway for small businesses to raise money in an efficient, public, and transparent manner. Mr. Chair, I'm committed to working with my colleagues on both sides of the aisle to ensure that Arizona's innovative small businesses have every opportunity to thrive, and I hope that members will join Mr. Hollingsworth and myself in support of this bipartisan legislation. Again, thank you, Mr. Hollingsworth, for working with me on this common sense bipartisan bill, and Mr. Chair, I yield back.
Gentlelady yields back. For what purpose does the gentleman from Indiana seek recognition? Gentleman is recognized for 5 minutes.
Well, I also wanted to rise in support of this legislation. I really appreciate the opportunity to work with Representative Sinema, and her office has been terrific in helping us not only understand the issue that small companies face, but also how this particular legislation can help solve that issue. As she well described, the opportunity here is for small businesses who are already SEC reporting to have another avenue for them to raise capital more quickly, to develop innovations, to invest more here in America, and to hire more Americans to accomplish their financial futures and their goals as well. And so I'm really proud to be a part of this legislation, and I would encourage all my colleagues to continue to support it. And I yield back, Mr. Chairman.
Gentleman yields back. Who seeks recognition? For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you very much. I think that we should all congratulate Ms. Sinema and Mr. Hausman for coming together on this legislation. H.R. 2864 builds on our efforts in the jumpstart of our Business Startup Act, Jobs Act, that is, to help companies access to public markets and raise much-needed capital from everyday investors willing to take a chance on them. It does so by narrowly expanding Title IV of the Jobs Act to allow public companies to take advantage of Regulation A+. Currently, Regulation A+ allows private companies to raise up to $50 million in capital by selling unregistered but freely tradable stock to the public as a quicker and less expensive alternative to a fully registered securities offering. Extending Regulation A+ eligibility to public companies would provide them with an additional efficient method of raising a small fixed amount of capital. To be eligible to use this faster and cheaper fundraising alternative, public companies must be up to date in their public filings with the Securities and Exchange Commission. In addition, any sale of securities pursuant to Regulation A+ must comply with several other regulatory requirements, including SEC approval or qualification of the offering, disclosure of the offering, information to investors, and limitations on sales per investor. Notably, bad actors who have committed certain felonies, misdemeanors, or other misconduct within the past 5 years are disqualified from using Regulation A+. These restrictions help ensure that investors in Regulation A+ offerings are informed about their purchases and protected from fraud. While I support this bill, I do believe that this committee has adopted a piecemeal approach to private and public market regulation, and it should be reexamined to ensure that we are appropriately incentivizing companies to become public. I thank Representative Sinema for her work on this bipartisan bill, and I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Michigan seek recognition?
Mr. Chairman, I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, for giving me this opportunity to address this important issue. And I want to congratulate and thank my colleagues, Representative Sinema and Hollingsworth, for pursuing this. And I want to express my strong support to H.R. 2864. This is really an updated exemption known as Reg A+, which would increase the amount companies could offer from $5 million to $50 million within a 12-month period. Reg A+ would also preempt state registration and qualification requirements. We know that there have been a number of filings since the rate of Reg A+ securities offerings has increased. However, we know that this was really an oversight by the SEC when it issued its final rule implementing Title IV. It excluded these fully SEC reporting companies from being eligible to issue an offering under Reg A+. This exclusion was contrary to the intent of Title IV, which means to improve access to capital for small companies, including those fully SEC reporting companies. And November of 2016, an SEC study showed that, consistent with the intent of Reg A+, the typical issuer based on offering data was relatively small. Typical issuer had median assets of $100,000 across all filings and approximately $200,000 across qualified filings. They have no cash, property, plants, equipment, long-term debt, revenue, or net income. Those characteristics are consistent with the present pool of filers. which is really small and early stage companies with limited collateral, and that has restricted their ability to obtain a bank loan and other debt financing. So this Reg A Plus makes it easier for these small companies to access capital. This bill will help that. It's expanding those rules to include companies that are fully reporting, and by doing this, Congress is helping to facilitate that capital formation for these small reporting companies as well as the non-reporting companies, and they give small investors greater investment opportunities and facilitate liquidity in the capital markets. And we've talked about that, Mr. Chairman, a number of times about how we make sure that everybody has the opportunity to catch that up wave without damaging liquidity in the marketplace. And in fact, this enhances it. So just again, congratulations to my colleagues, and I yield back to the
Would you yield to the chairman?
I do yield to the chairman.
I thank the gentleman for yielding. I just want to briefly add my voice to yours and congratulate the gentlelady from Arizona, the gentleman from Indiana, on working on what I believe, in some respects, is a small measure, but a very important measure. Because the Jobs Act started out in some respects as small, but has proven large to our economy. So I think that the SEC's exclusion of fully reporting companies is inconsistent with the Jobs Act. That is being corrected here today. And so to allow these smaller companies to have take full advantage of Regulation A+, I believe it's going to be an important part of bringing the economy back, having a healthier economy, getting us far closer, putting us back on that path to achieving 3%, perhaps even 3% GDP growth. We know that, unfortunately, we still have a dearth of small business births. The latest stats I've seen saying, unfortunately, there's still been more small business deaths than births. This cannot happen. We know that small businesses are the job engine of America. So the work done by the gentlelady from Arizona and Indiana are critically important on getting these jobs flowing again, yet through our economy, and I salute them for the work. I yield back to the gentleman from Michigan.
Well,
and
thank you, Mr. Chairman. I just, to echo that, I think this bipartisan approach to deal with these issues is important to note. And the American people, I know my constituents, I'm sure many of my colleagues, when we go back home, they wonder, are you able to work together? And the answer is yes. But let's not create a circus. Let's prove to the American people that we are here for them and will continue to work for them. And with that, Mr. Chairman, I yield back.
For our purposes, the gentlelady from New York seek recognition.
To address House for 5 minutes.
The gentlelady is recognized for 5 minutes.
First, I'd like to be associated with the remarks of the gentleman from the great state of Michigan, and also to congratulate my colleagues Sinema and Hollingsworth on not only on this amendment, but Mr. Hollingsworth on truly life's greatest experience, the birth of a child. Congratulations. So, but it's about to happen. I support this bill, which allows the SEC reporting companies to sell securities under Regulation A+. Giving companies more options to raise capital from investors is a good thing as long as there are adequate investor protections in place. And in this case, I am pleased that there are. In fact, I would argue that, if anything, investor protection is improved under this bill. We already allow non-reporting companies to use Reg A, and non-reporting companies are smaller, riskier, and less transparent than reporting companies. Reporting companies are bigger, more established, that are subject to SEC oversight and already provide their investors with extensive quarterly financial statements. In contrast, investors usually don't have any information about non-reporting companies. That's why Reg A+ requires non-reporting companies to make some basic disclosures to investors before they can sell them securities. What this means is that the protections investors would receive under this bill are actually greater than the protections investors currently receive when a non-reporting company sells securities under Reg A+. Because investors will have access to much more extensive disclosures from reporting companies than when they buy their securities. So if you're okay with allowing non-reporting companies to use Reg A+, then we should also be okay with allowing reporting companies to use Reg A+. So for me, this I would describe is an easy technological solution that gives companies another option for raising capital without undermining investor protection at all. I urge my colleagues to support this bill, and I compliment the author and the co-sponsors of the bill, of which I am one. And I yield back.
Gentlelady yields back. Who seeks recognition? Does anybody seek for what purpose? The gentleman from Florida seek recognition?
Mr. Chairman, move to strike the last word.
Gentleman is recognized for 5 minutes.
I'm not going to need that long. I just wanted to add to the congratulations to Representative Sinema and Hollingsworth. I think that we've seen a breath of fresh air in this committee this morning, and Mr. Chairman and Ranking Member, I want to thank you for setting the tone that we're experiencing here today on this particular piece of legislation. It is being offered in a bipartisan fashion. It has inspired me to just hear about it. I imagine it inspires others as well. If we can do more of this in the future, we will have the great country that all our constituents deserve. Thank you. I yield back.
Gentleman yields back. Who seeks recognition? Are there any amendments? There being no further discussion or amendments to the bill, the question now occurs on adoption of the substitute amendment offered by the gentlelady from Arizona. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. For what purposes, the gentleman from Indiana seek recognition?
Mr. Chairman, I'd like to ask for a roll call vote.
Recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Recorded a sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 1624. The clerk will report the bill, which was distributed in advance.
H.R. 1624, to require the appropriate federal banking agencies to treat certain municipal
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Indiana, Mr. Messer, to offer an amendment in the nature of the substitute. Does the gentleman have an amendment at the desk?
Yes, I do.
I believe copies of the amendment have already been distributed and are on the dais. The clerk will report.
Amendment in the nature of a substitute offered by Mr. Messer. Strike all after the enacting clause, insert the following.
Without objection, the amendment is considered as read and will serve as base text for purpose of amendment. The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks for your leadership and help on this bill. I want to start with taking a moment of personal privilege to embarrass my 14-year-old daughter, Emma Messer, who is, stand up, huh? Yeah. And can we give her a Financial Services Committee welcome? I'm proud to have Emma with me today. Thank you again, Mr. Chairman. I also want to take the time to thank Congresswoman Maloney, who is the lead Democratic co-sponsor on this important bill, and for all her help and assistance in this work. And Chairman, I want to thank your team and the entire Financial Services staff for all their hard work on the legislation as well. You know, in September 2014, the federal banking regulators issued a rule establishing the liquidity coverage ratio, LCR. The purpose of the LCR is to ensure that banks maintain adequate, high-quality liquid assets, HQLAs, to endure certain periods of financial stress. Unfortunately, this rule excludes U.S. municipal bonds. It unfairly singles out domestic municipal debt, even though many corporate bonds and sub-sovereign German municipal debt with similar liquidity features are considered HQLAs. Yep, that's correct. I did not misspeak. Some of the safest U.S. domestic municipal securities are not included, even though some foreign municipal debt is. The bottom line is, obscure banking regulations that exclude all domestic municipal securities from HQLA eligibility discourage financial institutions from holding municipal debt. And worst of all, the rule is costing taxpayers money. Because of this senseless federal regulation, state and local governments incur higher borrowing costs to finance infrastructure projects, hurting towns and cities across America and in my home state of Indiana. Our bill, H.R. 1624, the Municipal Finance Support Act of 2017, provides a common sense solution to this arbitrary rule, ensuring the federal government isn't standing in the way of local investment and growth. This bill would direct all federal bank regulators, the FDIC, the Fed, and the OCC, to classify all investment-grade municipal securities as an HQLA. That is no lower than a level 2B liquid asset for purposes of the LCR. Under this bill, bank regulators maintain the flexibility to determine the appropriate risk weight for qualifying investment-grade municipal securities. But instead of disincentivizing U.S. banks from holding high-grade municipal debt, this legislation will lower the cost of municipal projects and help to ensure low-cost infrastructure financing remains available for state and local governments across the nation. The bill is supported by a wide array of stakeholders like the National Governors Association, the Government Finance Officers Association, State Treasurer Associations, among others, including the Indiana State Treasurer, my good friend Kelly Mitchell. A similar bill also passed this committee last Congress by a vote of 56-1 in this committee and later passed the House by a voice vote. This year, we will be working hard to push the legislation all the way across the finish line. I'm proud to have worked with Congresswoman Maloney on this bipartisan legislation that will encourage growth for all of our communities. And I urge my colleagues to support this bipartisan bill. And I yield back the 1 minute and 5 seconds of my time. Thank you, Mr. Chairman.
Most appreciated, and with a teenage daughter myself, members will always be recognized to embarrass their daughters. For what purpose does the gentlelady from New York seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
First of all, I'd like to thank my colleague and friend, Mr. Messer, for his diligent, creative determination, really, to bring this bill before us today and for his hard work on it. I believe in this bill. I think it's very important to the financing structure of our cities and our states. It's very important to me personally. We just opened up a 2nd Avenue subway in the district I'm privileged to represent. It could not have been built without the funding tool of municipal bonds, and it has been called the most important economic development, new creation in the region. So investing in our cities and our states are important, and it should be helped, not hindered. And we introduced this bill in order to level the playing field for our cities and states by requiring the banking regulators to treat certain municipal bonds as liquid assets, just like corporate bonds, stocks, and other assets. And as a former member of the City Council of the City of New York, I know firsthand the importance of municipal bonds. They allow states, they allow cities to finance infrastructure, build schools, hospitals, pave roads. They are absolutely critical to the financial structure of our cities, which are in many cases one of the creative centers in our country. Unfortunately, in the banking regulator's liquidity rule, which requires banks to hold a minimum amount of liquid assets, they chose to allow corporate bonds to qualify as liquid assets, but completely excluded municipal bonds, even though municipal bonds that are just as fair, just as secure, just as liquid as corporate bonds. This is totally unfair. This makes absolutely no sense and effectively discriminates against municipal bonds, and I would say then discriminates against the funding and financing of counties, cities, and states. A municipal bond that is just as liquid as the most liquid corporate bond would not be counted as a liquid asset under the rule, just because it was issued by a city or a state rather than a corporation. This, in my opinion, is unfair and discriminatory. The Fed has already recognized this error and has already amended its rule to allow certain municipal bonds to count as liquid assets, and they should be praised for taking a second look at the data and recognizing that some muni bonds are, in fact, highly liquid and just as safe as corporate bonds. But the OCC, which regulates national banks, is still refusing to amend its rule and insists on favoring corporations over cities, municipalities, counties, and states. So Mr. Messer and I introduced this bill because this kind of arbitrary discrimination against municipalities cannot be allowed to continue. It's unfair and it stymies the growth and repair of our cities and states. And it's important to note that this bill does not undermine safety and soundness. It does not require regulators to treat bonds that are illiquid as liquid. It simply says that municipal bonds should be afforded the same opportunity as corporate bonds to be treated as liquid assets. So in sum, this bill levels the playing field for cities and states in a way that maintains the safety and soundness of our banking system, but allows them to be treated fairly. I urge my colleagues to support this bill. It is a bill that invests in the future of the infrastructure of our cities, states, and counties, and I hope that we'll have a strong bipartisan message as we send it to the floor. And again, I think, Mr. Messer, you have been such a devoted advocate on this, and I know that the success today, if we have it, is largely due to your efforts, and I want to again publicly thank you. I yield back.
Gentlelady yields back. For what purpose? The gentleman from Illinois seek recognition.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I also would like to thank my colleague from Indiana, Congressman Messer, for his leadership on this important piece of legislation. While I believe financial institutions must maintain healthy balance sheets, I remain puzzled why financial regulators would narrowly mandate what sorts of assets financial institutions should hold. As we know, on September 3rd, 2014, the OCC, Fed, and FDIC issued a final rule that implements the liquidity coverage ratio pursuant to the directive of the Basel Committee on Banking Supervision. The final rule is designed to strengthen the liquidity risk management of banks, savings associations, and bank holding companies by requiring them to hold specific amounts of certain assets deemed by banking regulators to be high quality. Majority of municipal debt meets the criteria to be included in the definition of high-quality liquid assets, or HQLA. However, with almost no substantive explanation, the banking regulator's final rule implementing the liquidity coverage ratio excluded municipal securities from inclusion in its definition of HQLA. This regulation disincentives banks from holding municipal securities, which may make it more difficult for local governments to borrow and invest in infrastructure like police stations, schools, hospitals, and roads. Classifying investment-grade municipal securities as HQLA will help ensure low-cost infrastructure financing remains available for state and local government in every congressional district. In May 27, 2015, a letter to House leadership, the National Association of State Treasurers, National Association of Counties, U.S. Conference of Mayors, and a number of other trade groups wrote, and I quote, "Classifying investment-grade municipal securities as HQLA will help ensure low-cost infrastructure financing remains available for municipal securities issuers to continue to build the infrastructure for commerce, public safety, job creation, and the development of an educated workforce that our communities and national economy relies on," end quote. Congress has heard more than enough testimony for why municipal securities should be treated as HQLA. Last Congress, the Financial Institutions Subcommittee heard from Dr. Kupiak of the American Enterprise Institute, and I quote from his testimony, he says, "The change mandated by H.R. 2209, the bill number from the last Congress, is appropriate and consistent with the public interest. There is no reason why high-quality liquid bonds issued by U.S. states and municipalities should receive a lower standing than foreign sovereign debt with equivalent or even less credit quality and market liquidity," end quote. During a September 2014 hearing before the Senate Banking Committee, Fed Governor Daniel Tarullo observed that some states and local debt is frequently traded and may be, and I quote, "comparable to that of the very liquid corporate bonds," end quote, that qualify as HQLA. I'm a proud original co-sponsor of Mr. Messer's legislation that addresses these issues by requiring the banking regulators to classify Level 2B municipal securities as high-quality liquid assets for the purposes of the liquidity coverage ratio within 90 days of enactment. This bill would ensure state and local governments are able to secure the affordable financing they need to invest in and strengthen our communities without undermining safety and soundness. I encourage all of my colleagues to support this important piece of legislation, and will yield back the balance of my time.
Gentleman yields back. For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Mr. Chairman and members, this is the second bipartisan bill here today. This bill, sponsored by Mr. Messer, is joined by Democratic co-sponsors. Of course, the leader is Ms. Maloney, then Ms. Velasquez, Sherman, Meeks, Moore, Delaney, and Sinema. This bill attempts to address a concern that because municipal securities were excluded from the pool of eligible assets meeting the liquidity coverage ratio, or LCR, the biggest banks would no longer want to hold these assets. I supported the bill last Congress. However, I question how a rule that only affected the largest banks, which collectively make up only 5% of the muni market, would really affect municipal financing. Indeed, since the LCR rule went into effect in January of 2015, there's been no discernible effect on the financing costs of municipalities. I also continue to wonder just how many municipalities would be helped by this bill. Of more than 90,000 municipal issuers, including towns, hospitals, school districts, cities, and states, only a handful are expected to meet the criteria according to the bank regulators. Nevertheless, the proposal offered by Mr. Messer does provide a path for the few municipal bonds that would meet the requirements to qualify under Level 2B to benefit these municipalities. At the same time, it also makes sense for a bank to use any asset that is liquid, marketable, and investment grade to meet its funding needs during periods of market stress. I would welcome further proposals to improve the liquidity in the municipal markets generally, but would reiterate that my support for this bill remains conditioned on the fact that only municipal securities that meet the eligibility requirements as set by the regulators should be considered liquid. So I appreciate the hard work of Mr. Messer, Ms. Maloney, and all of the co-sponsors to work with the sponsor to further improve the bill. I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Michigan seek recognition?
Mr. Chairman, I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and I'm here to offer my unconditional support of this bill, and I want to express my thanks to my capital markets ranking member, Ms. Maloney, and Representative Messer's bipartisan work on this act. As has been discussed here, the various particulars regarding the regulators, the FDIC, the Federal Reserve, the OCC. It just makes sense to me that we have this reasonable level of recognition of the stability of these liquid assets coming from these municipalities, and they are extremely important to these municipalities and states to finance critical infrastructure projects that we have been talking about as a national priority. And it is important that they are able to issue these and to sell that debt at reasonable cost structures as well. That saves taxpayers on the local level as well as state level, and frankly is good for our country. And they are an extremely attractive investment option for many individuals and financial firms. What I found was interesting, Mr. Chairman, is a significant number of these investors participate. It's a $3.8 trillion security market, and as of March of this year, individuals directly held about $1.56 trillion of that outstanding municipal securities, and another approximate $912 billion was held by money market funds, mutual funds, and closed-end funds on behalf of primarily retail investors. So you see well over half of all of the securities that are held really come from that retail participation, and I think that that is extremely helpful for us as a nation, tapping into individuals' liquidity to get this kind of infrastructure done. So, as was noted before, the definition of these HQLAs had been defined far too narrowly, and I think that this is a reasonable bipartisan bill that would ease this burden of financial firms in order to meet their regulatory capital requirements. And it's good for our local municipalities, it's good for our states, it's good for America, it's good for investors. And I just urge my colleagues to grant their support, and I yield back the balance of my time.
If you'd yield to the chairman? I'm
happy to do so, sir.
Thank the gentleman for yielding. I want to really thank the gentleman from Indiana, Mr. Messer, who has certainly been dogged on this issue. His leadership is unquestioned. I appreciate the cooperation of the gentlelady from New York as well to make this a strong bipartisan measure. It, again, doesn't seem to make a whole lot of sense that certain general obligation municipal securities be included in the HQLA, but revenue bonds would not. And we have had, I believe, testimony from SIFMA that indicated that the markets quite often prefer the revenue obligations, which would mean that there would be higher demand, that they would be more secure. And then, as the gentleman from Illinois pointed out, the irony that sovereign debt, foreign sovereign debt, would be included in the definition, but not revenue obligations of our cities and states. So I think that if we did not do this, I think I have the stat right, that HQLA would be restricted to less than 40% of the municipal securities that have been issued. I don't think that is good for our states and our communities. I think this is important. In this particular case, the Federal Reserve has taken the lead, but the OCC and FDIC have yet to follow. It is time for them to follow. And again, I just want to thank the gentleman from Indiana, gentlelady from New York on their leadership, and I encourage all members to support this. I yield back to the gentleman.
Thank you, Mr. Chairman. I think you bring up an excellent point. I think it would be ironic that somehow Greek debt would be recognized as liquid assets, but that of Texas, Michigan, or even California would not be. I think it's time to rectify that, and with that, I yield back.
Gentleman yields back. Who seeks recognition? For what purpose does the gentlelady from New York seek recognition?
Yes, Mr. Chairman, I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. I'm proud to co-sponsor H.R. 1624, the Municipal Finance Support Act of 2017, which will allow high-quality municipal debt to be classified as a level equivalent to debt issued by corporations. This important legislation will amend the Federal Deposit Insurance Act to require federal banking agencies, including the FDIC, the Fed Board, and the OCC, to treat investment-grade municipal obligations that are both liquid and readily marketable as Level 2A assets under the liquidity coverage ratio. High-quality liquid assets are important because banks can easily convert these assets to cash in times of economic stress. During a time of illiquidity, the bank could rely on its high-quality liquid assets to pay short-term obligations and then rebuild its liquidity buffer once markets recover. This legislation responds to an important need after the FDIC, the Fed Board, and the OCC established the liquidity coverage rule for large banking organizations and identified high-quality liquid assets that banks could hold to meet the requirement. Unfortunately, despite including such instruments as foreign sovereign debt among the acceptable investment categories, the rule excluded investment-grade municipal securities from its definition of high-quality liquid assets under the rule. not recognizing municipal securities in any of the categories of high-quality liquid assets under the rule creates a disincentive for banks to hold them. This results in increased costs for state and local governments to issue bonds for critical needs like infrastructure. This bill fills a critical need, and it is particularly important to my home city of New York. As such, I want to thank my good friend Carolyn Maloney for spending countless hours, 6 years, and improving this bill and working to ensure its passage. I also want to thank Mr. Messer for introducing this bill and providing me the opportunity to co-sponsor it along with him. Last Congress, we passed an identical bill out of this committee by a vote of 56-1, and it was reported out of the House on voice vote. Mr. Chairman, it is time to pass this bill once and for all. And with that, I thank you and I yield back.
Gentlelady yields back. For what purpose the gentleman from Maine seek recognition?
Strike the last word, Mr. Chairman.
Gentleman is recognized for 5 minutes.
Thank you, sir. Appreciate it very much. You know, in this town, I think a lot of us forget that government, Mr. Chairman, is to help people. That's the role of government, to help people. And this is a classic opportunity for that to happen. When I was state treasurer up in Maine a few years ago, I recall using the municipal bond market, sir, as a very effective tool such that we could borrow money cheaply. We had this option, whether it be general obligation bonds supported by income tax revenues, or whether it be revenue bonds supported by sewer fees or water fees. But there was this option, Mr. Chairman, to borrow money cheaply, and lots of it if you needed it, in order to build a new school or a new road or a new hospital or a new a landfill in a small town in Maine. This is critically important to make sure government allows this to happen and aids in this process. And that's why I am so thankful for Mr. Messer and Ms. Maloney to offer this amendment, this bill rather. It's a very good one. It makes sense. It's Maine common sense to make sure we give our financial institutions, our banks in particular, the opportunity to buy municipal bonds and use them as reserves. This additional source of demand will make sure money continues to flow to our states and our cities and towns across America, so they can provide a better infrastructure, better lives for the folks that live there. And you know, the other thing, Mr. Chairman, if I may, is that these municipal bonds, I know it's already been said by a number of folks here, are very liquid. And they are very safe investments. In many cases, as I mentioned earlier, supported by the general tax revenues levied by a municipality or a state. Individual investors also take advantage of these investments, especially those that are seniors. So I am completely supportive of this bill. It's a very good bill. It's a common sense bill. It's about time, Mr. Chairman, that we get all these regulators on the same page, give them guidance to make sure these municipal bonds can be used as reserves for our banks to help our municipalities and rebuild America's infrastructure. Thank you, sir. Again, I salute Mr. Messer, Ms. Maloney for this terrific bill. I urge everybody to support H.R. 1624. I yield back my time, sir.
Gentleman yields back. For what purpose does gentleman from Massachusetts seek recognition?
Mr. Chairman, I'd like to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you. Mr. Chairman, just for clarification, this is not the same bill that came before the committee last time. It's been changed in a meaningful and I think very, very helpful manner. I want to thank Mr. Messer and Ms. Maloney for your great work on this. The last time this bill came to committee, the vote was 56-1, and I was the one. And my concern was this, that in the previous bill, municipal debt would be classified as two-way in the previous iteration, which would be the equivalency of a GSC, Fannie Mae, Freddie Mac debt obligation, which was a false equivalency. When you think about it, the GSEs have the strength and the resiliency of the entire housing market nationally. There's a global market there and great credibility and lower risk than would be a bond issued by any of the 10 major cities in the United States that have filed for bankruptcy recently, or any of the 10 cities that are classified as distressed. So in those cases, while I certainly support allowing cities to borrow money more cheaply, I don't support creating risk for those cities, because if you falsely pump up their LCR and then something happens like we had in Detroit or Stockton or San Bernardino or any of the other distressed situations, that rating automatically plummets. And that damages that city's ability to recover, to raise money, and to get out of a bad place. But the good thing is that in this bill, we lower that a notch. We lower it to 2B, equivalent to corporate debt, which on a case-by-case basis may be low risk or moderate risk, depending on the circumstance. So I do support this bill. I think that it's a reasonable equivalency out there in the market. I think it'll actually help a lot of cities do exactly what Mr. Messer and Ms. Maloney intended. But I think it avoids that embellishment, if you will, of some cities' risk ratio in terms of the bonds that they issue. So I am delighted that I can join the rest of the members in supporting this amended version, which classifies municipal debt at 2B. I think that's a good place, and I think it's fair, and I think it's the one that the markets will embrace. And again, I want to thank the sponsors of this for their diligence and their willingness to consider a compromise here to get us to a good place. So with that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition? For what purpose does the gentlelady from Wisconsin seek recognition?
We'll strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. You know, much has been said, and I just want to join in with my colleagues in thanking Mr. Messer and Ms. Maloney for working on this legislation. I'd like to enter into a record a letter that Representative Sewell and I wrote in 2014 that really addresses the specific issues that this bill will rectify without objection.
Without objection.
I think that the HQLA mission is better served by including these municipal bonds. I think they further diversify the holdings, they're readily tradable, they're of high quality, and as a matter of fact, they reduce systemic risk. I just want to, much has been said, but I just want to remind the body that during the 2008 financial crisis, we saw investors buying municipal bonds as a safe, low default option. In other words, in a stressful situation, we saw trading and interest in bonds increase. So I am just absolutely delighted to join my colleagues in supporting this amendment. And yes, your daughter is embarrassed. Just get used to it. I yield back.
Gentlelady yields back. Who seeks recognition? There being no further discussion or amendments to the bill, the question now occurs on adoption of the substitute amendment offered by the gentleman from Indiana. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. For what purpose does the gentleman from Indiana seek recognition?
Mr. Chairman, I want to thank everyone for all their work and the bipartisan spirit of the conversation today, and I request a recorded vote.
Recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 3110. The clerk will report the bill, which was distributed in advance.
H.R. 3110 to amend the Financial Stability Act of 2010 to modify the term of the independent member of the Financial
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Illinois, Mr. Holtgren, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. The Financial Stability Oversight Council Insurance Member Continuity Act is technical but extremely important. It's an important correction to the Dodd-Frank Act. I'm very grateful for the support of the lead co-sponsor of this bill, Ranking Member Waters, and the support of so many of our Republican and Democrat colleagues. I'd also like to thank Chairman Hensarling for including this bill in the markup today. The Financial Stability Oversight Council was created as part of the Dodd-Frank Act. The general purpose of this regulatory body is to provide a forum for discussion of our financial markets and coordination of financial regulations when appropriate. And of course, the Council has the authority to designate non-banks as systemically important. The Council includes 10 voting members, including an independent member with insurance expertise, which is a unique position for two important reasons for the purpose of this legislation. First, this is the only voting member of the Council with a statutory expectation of having expertise in insurance issues. Other members of the Council include financial institution and market regulators, none of which necessarily has any particular demonstrable experience with insurance policy. And number two, this is the only voting member of the FSOC wherein the position will remain vacant at the end of the term, with no mechanism to provide for a transition until someone new is appointed and confirmed. This legislation is about ensuring that the FSOC is able to benefit from the perspective of a voting member with insurance expertise without unnecessary lapses. Or to quote a letter that the National Association of Insurance Commissioners sent to the ranking member and to me, and I quote, "It is important that the Council have members that have a deep understanding of the unique aspects of the insurance industry and our state-based insurance regulatory system," end quote. When asked about this issue by Senator Scott in the Banking Committee in the Senate earlier this month, Chair Yellen testified, she thinks, and I quote, "It's important for FSOC to have insurance expertise," end quote. I couldn't agree more. In the case of Illinois, we have a very robust insurance market because of the carefully crafted regulatory system we've developed in the state over the years. This allows great companies to thrive and protects the interests of their policyholders. This might not be the case if the FSOC lacks sufficient understanding of our insurance markets and regulatory system. And as a reminder, as a regulatory body, the FSOC does more than vote on policy matters. This is a forum for understanding how financial markets and our regulatory structure are interacting and making recommendations when appropriate. If there is a significant unexpected event in the insurance market, which I'm by no means predicting, then the FSOC would be well served by someone with insurance expertise in order to come up with the appropriate response. What was not intended by Dodd-Frank is for the position to be vacant while the President and Senate work to confirm a new appointee. Other voting positions on the FSOC have the benefit of someone being able to serve as in an acting capacity until someone new is confirmed. There's no such mechanism for the FSOC independent member with insurance expertise. It was simply overlooked during the consideration of Dodd-Frank. In fact, the Dodd-Frank Act clearly states that positions on the FSOC can be filled by someone in an acting capacity. My legislation would simply bring continuity with other FSOC voting members for when a term ends. It provides a mechanism to keep this important voice on the Council. It allows the FSOC independent member with the insurance expertise to remain past his or her term for the earlier of either 18 months or when a successor is confirmed. This is especially timely given that the term of the individual currently filling this position, Roy Woodall, ends on September 30th of this year. Since President Trump has not yet announced who should fill this role, and given the Senate will not likely have sufficient time to react between now and the end of September, we must have this legislation signed into law before the end of Mr. Woodall's term. Mr. Chairman, if I may, I would like to enter into the record these letters of support. First, the Property Casualty Insurance Association of America, the National Association of Mutual Insurance Companies, the National Association of Insurance Commissioners, the American Council of Life Insurance, the Insurance Coalition, and the Financial Services Roundtable.
Without objection.
I'd also, again, like to take the opportunity to thank Ranking Member Waters and all of my colleagues on both sides of the aisle for working with me. I urge support for this legislation, and I'm hopeful that it can move swiftly to the President's desk. With that, thank you, Mr. Chairman, and I yield back.
Gentleman yields back. For what purpose does the ranking member seek recognition?
Mr. Chairman, I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. I'm so pleased that I was able to introduce this common sense piece of legislation along with Mr. Hultgren from Illinois. This bill is simple. It makes a minor technical correction to the Dodd-Frank Act to address an issue regarding the term of the independent member with insurance expertise on the Financial Stability Oversight Council, commonly known as the FSOC. The current independent member's term is set to expire on September 30th, 2017, and it remains unclear as to whether a successor will be confirmed in a timely fashion. The Dodd-Frank Act does address how to fill a vacancy pending the appointment of an agency head, but it does not address this question as it relates to the insurance member. As such, this bill would allow the current independent insurance member to remain a voting member of the FSOC for the earlier of either 18 months or the appointment of a successor. This will ensure that the FSOC continues to have a member that can bring insurance expertise to the discussions and that the entire roster of voting members on the FSOC is complete. This legislation is an example of cooperation across the aisle in order to make a common sense technical correction to improve Dodd-Frank. So thank you for bringing this bill up today, and thank you to the many Democrats and Republicans that joined us in co-sponsoring this legislation. I look forward to its swift enactment. I yield back the balance of my time.
Gentlelady yields back. Who seeks, for what purpose does the gentleman from Wisconsin seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I just want to make a couple of quick comments indicating my support for this bill, and thank you, Mr. Holmgren, for his good work on this proposal. Listen, we've seen and had some concerns with FSOC and some of the actions that they have taken in regard to non-bank financial institutions. Sometimes we have FSOC view the world only through the bank prism, and those of us in this committee understand that banks and insurance companies are very different entities. And to have an independent voting member with insurance experience is incredibly important. If I was to put in one concern on this bill is when there is a vacancy with such an important position, that really gears the Senate and the President up to actually take action and get someone to fill that spot. However, I'm more concerned about FSOC's activity without this independent member with insurance experience giving advice to the other members on FSOC, and therefore I'm very supportive of this proposal. More specifically, Mr. Woodall, who currently holds this position, I think has been a great advocate and educator on our state-based model for insurance, and I think that's incredibly important as we deal with some of the reforms and issues before this committee and before our country. So again, I want to thank Mr. Holmgren for his thoughtful bill, and I want to thank the ranking member for her wonderful support of a slight tweak to the Dodd-Frank Act. So with that, Mr. Chairman, I yield back.
Would you yield to the chairman?
I would yield to the chairman.
Just a brief comment. I want to thank the gentleman from Illinois for his leadership. I want to thank the ranking member as well. Again, another bipartisan bill. I suspect this was an oversight in Dodd-Frank, but it is critical to our capital markets, to anybody who obviously deals in our insurance markets, that we have continuity on FSOC, again, an organization of which we've had a number of problems, challenges, and concerns. But as it does its business, it must have a continuity of insurance expertise. The bill from the gentleman from Illinois will guarantee that, and I would just urge all members to support the bill. I yield back to the gentleman from Wisconsin.
And I yield back to the chairman.
Gentleman yields back. For what purpose does gentlelady from New York seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman, and I support this bill, which is a technical correction to Dodd-Frank, which ensures that the Financial Stability Oversight Council always has an insurance expert as a voting member. The FSOC has 3 members that are supposed to have expertise in insurance issues: the Director of the Federal Insurance Office, a State Insurance Commissioner, and an independent member with insurance expertise who is nominated by the President and confirmed by the Senate. But only the independent member with insurance expertise is a voting member of FSOC. The other 2 are non-voting members. So the independent member is actually the most important of the 3 members because they have the insurance expertise and they have the vote. Unfortunately, due to an oversight, we did not plan for what happened if the independent member's term expired before his or her successor was confirmed, and this is exactly what has happened with independent member Roy Woodall. His term expires on September 30th, which is just 68 days away. The FSOC will have no voting members with insurance expertise until the President nominates and the Senate confirms a new independent member, and who knows when that is going to happen. So this is especially important because 3 of the 4 companies that FSOC has designated as systemically important have been insurance companies, 2 of which are located in my district, AIG and MetLife and Prudential in Massachusetts. And FSOC is going to have to make some important decisions soon about how to proceed in MetLife's pending lawsuit over its SIFI designation. And if MetLife wins on appeal, FSOC will have to decide whether to try to designate MetLife as a SIFI again after making whatever changes to its process that the court orders. So it's critically important that FSOC have an independent member with insurance expertise while they're making these important decisions. This bill will ensure that the existing independent member with insurance expertise can continue to serve for another 18 months or until his successor is confirmed by the Senate. This will provide much-needed continuity and will ensure that FSOC always has a genuine insurance expert at the table when they're making important decisions about systemic risk. So this is an important, I would say it's just a technical fix, but it's an important fix, and I urge my colleagues to support it, and I congratulate Holmgren and Waters for their hard work and leadership on taking on this important, boring but extremely important, legitimate technical fix that has to take place. It is critically important to the insurance industry, and I thank you.
Gentlelady yields back. Who seeks recognition? There being no further discussion or amendments to the bill, the question now occurs on ordering the bill reported favorably to the House. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. For what purpose does the gentleman from Illinois seek recognition?
Would ask for a recorded vote.
Recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 3326. The clerk will report the bill, which was distributed in advance.
H.R. 3326, to increase accountability, combat corruption, and strengthen management effectiveness at the World Bank.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Kentucky, Mr. Barr, chair of the Monetary Policy and Trade Subcommittee, and sponsor of the legislation to offer an amendment in the nature of the substitute. Does the gentleman have an amendment at the desk?
I have an amendment at the desk.
Copies of the amendment, I've been informed, have already been distributed and are on the dais. The clerk will report.
Amendment in the nature of a substitute offered by Mr. Barr. Strike all after the enacting clause and insert the
Without
following.
objection, the amendment is considered as read and will serve as base text for purposes of amendment. The gentleman is recognized for 5 minutes.
Mr. Chairman, I'm pleased to sponsor H.R. 3326 and the amendment in the nature of a substitute, the World Bank Accountability Act. Every 3 years, Congress sets funding levels for the World Bank's International Development Association, IDA, the bank's financing arm for the poorest countries on earth. This authorization, also known as an IDA replenishment, tends to be a simple affair. But in our oversight of the bank's activities, I've come to believe that the current replenishment round, IDA 18, can and should be different. The World Bank Accountability Act would make future IDA appropriations contingent on the Treasury Department certifying the bank's progress on long overdue reforms. Here is how it works. For each fiscal year between 2018 and 2023, 15% of IDA appropriations will be withheld until Treasury reports to us that the bank is meeting a set of 3 institutional reforms. First, the bank would have to implement incentives, including through staff evaluation standards, that prioritize poverty reduction and project management over the World Bank's lending volume. The bank's failure to incentivize results has been documented by the bank itself for more than 2 decades. Last Congress, a former longtime staff member of the bank testified to the MPT subcommittee, quote, "The reality is the bank staff are assessed by the volume of their lending,
dollars of money lent. And that is just a poor indicator of the impact on poverty, unquote. Mr. Chairman, such a culture is contrary to the mission of the bank, and this bill endeavors to change that. The second condition for the bank to meet has to do with correcting management failures that enabled one of the worst bank scandals in memory, the Uganda Transport Sector Development Project. Under this initiative, an appalling lack of oversight led to a contractor sexually abusing underage girls and harassing female project staff. H.R. 3326 requires Treasury to report that the bank is preventing these failures from ever happening again. Third, this bill requires the bank to better manage its trust funds, which are an ad hoc funding arrangement that bypasses traditional oversight. In a 2015 report to Congress, Treasury estimated that the bank had over 900 of these trust funds. It's simply not credible that 900 separate funds combine to form a coherent development strategy, nor that they're all being held to the highest standards of accountability. On top of these measures, Mr. Chairman, the World Bank Accountability Act would withhold an additional 15% of IDA appropriations in order to secure a second set of reforms. These include a greater emphasis in official bank policies and country strategies on the importance of securing property rights, due process, and economic freedom. As distinguished academics such as Nobel Economics laureate Angus Deaton, New York University's William Easterly, and the University of Chicago's James Robinson have found, foreign aid makes little positive difference if we're indifferent to the poor's right to exert control over their livelihoods, own land and other assets, and be free from arbitrary government interference. Everyone in this hearing room takes such rights for granted. It only makes sense that such freedoms be at the center of the bank's approach to reducing poverty. In sum, the bank should not lavish loans on dictators who deprive their citizens of basic economic freedoms and basic human rights. In addition, H.R. 3326 incentivizes the bank to strengthen projects' ability to undermine violent extremism and to deny assistance to regimes that sponsor terrorism. This includes the Islamic Republic of Iran, whose increasing attempts to access financing should find no welcome at the bank. H.R. 3326 further calls on Treasury to oppose assistance to a country that knowingly fails to implement UN sanctions on North Korea. I think we can all agree that this is a common sense provision to the legislation. The bill also requires expanded use of forensic audits to root out systemic corruption in the bank's activities, as well as greater scrutiny when lending directly to governments. Finally, Mr. Chairman, the Trump administration, recognizing that our country faces significant fiscal pressures, has requested we reduce the IDA 18 funding level by $580 million. This legislation would enact this cut. In doing so, I believe this bill signals that we need to accept certain budget realities, but we should also insist on those limited dollars delivering the most that they can. I want to commend the Treasury Department for working with us on this legislation. Also, MPT subcommittee staff, especially Anthony Chang and Kevin Wysocki, for their outstanding work on this legislation. And I also thank members from both sides of the aisle whose demands for more effective policies and management at the World Bank have helped to inform this bill. I yield back.
Gentleman yields back. Who seeks recognition? For purposes, gentlelady from Wisconsin seek recognition.
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Well, thank you, Mr. Chairman, and I do want to thank the chairman of the Subcommittee, Monetary Policy and Trade Subcommittee, for weighing in on the details of the bill and walking us through the various components of it. I'm extremely supportive of this legislation, authorizing our IDA replenishment. This funds the concessionary loan window at the World Bank, which provides grants and loans to the world's poorest countries. It's good for poor countries, obviously, but I just want to point out to the committee that it strengthens U.S. foreign policy and anti-terrorism programs. This is what America stands for. It stands for meeting our obligations. I join in the discussion and narrative about improvements that need to be made at the World Bank. I've joined with Republican colleagues in pushing for reforms at the bank. I've worked with Democrats and working at reforms at the bank. But I am very, very worried about the mechanism for trying to force reform at the bank by withholding future funding authorizations or by cutting our funding. With this track record of working to improve how the bank operates, I think withholding funds sort of undercuts and undermines the credibility and leverage that we actually have at the bank to getting those reforms enacted and implemented. And I think we need to try to understand how the bank works, try to understand the power that we're ceding if, in fact, we continue to cut our obligations. And I just, you don't cut off your nose to spite your face. And so I would remind our colleagues that we have to be strategic. The world is a very, very dangerous place at this point. There has been a lot of discussion, certainly inside of the Democratic Party, and I can't help believe that there aren't discussions, my dear colleague, inside of the majority party about the need to balance military power with soft power. And this is one of the major tools in our soft power arsenal we should not cede power and control of. And so that's my opening statement, and I certainly hope that the committee as a whole will support this replenishment, and then we will continue to move on with making sure the World Bank it continues with its reform momentum. And with that, I would yield back.
Gentlelady yields back. For what purposes? Gentleman from Colorado seek recognition.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I'd like to applaud Representative Barr for his work on this legislation. When we talk about meeting obligations, it's a two-way street. The American people, through their hard-earned tax dollars, as we are watching the debt clock run right now, have been putting forward money to be able to help those in need around the world. And it's probably a very small request to actually expect accountability for those dollars. When we're talking about demonstrating poverty reduction, that's what the dollars are actually about, to be able to improve those economies, to be able to improve the prospects of individuals living in those countries, to have management failures addressed. That is a sensible thing, good policy in terms of any dollars that are going to be put out. And when we're talking about securing property rights, making sure that funds are denied for those who would sponsor terrorism, and having forensic audits that were just mentioned, good common sense proposals to make sure that the American taxpayer dollars are actually being spent wisely, and we're moving to be able to achieve the goals that we'd like to be able to see actually achieved in terms of helping those in need, but also making sure that we're going to be accountable for those dollars that the American taxpayers put forward. So again, I'd like to congratulate Representative Barr on his legislation and encourage all of our colleagues to be able to support it. And with that, I'll yield back.
Would you yield to the chairman?
I will yield to the chairman.
I thank the gentleman for yielding. I too wish to add my voice to those congratulating the gentleman from Kentucky for his leadership. This has been an area of the committee that has cried out for increased focus. And indeed, there are many, many problems at the World Bank. I appreciate the hearings that the gentleman has called for that has shed light onto the many ways that regrettably and ironically the World Bank in some instances has actually contributed and exacerbated poverty as opposed to remedying the problem. And so there has to be some level of accountability here. And as has been pointed out, we've had witnesses tell us that perhaps as many as 3.4 million people in 14 countries over a decade of policies of the World Bank have been removed from their homes or had their livelihoods threatened. We all know about the shocking revelations of the Uganda project. And so it is critical that America lead. It is critical that America reform this institution if we're going to truly help those who are intended to benefit from the program, and frankly, to help those who are paying for it the U.S. Taxpayer. And so, again, much of what we have seen before at the World Bank cries out for reform. This is a very thoughtful, methodical approach that's being taken by the committee under the chairmanship of Mr. Barr. I applaud it, and I would urge members on both sides of the aisle to support this reform plan. I yield back to the gentleman from Colorado. Does he yield back?
I yield back. Thank you, Mr. Chairman.
Who seeks recognition? For what purpose does the gentleman from Michigan seek recognition?
Mr. Chairman, I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. And as many members of the committee have expressed, I welcome this legislation today to authorize participation in the 18th replenishment of the International Development Association, or IDA, which is the window of the World Bank that provides grants, low-interest loans to the world's 77 poorest countries, home to more than 450 million people living in extreme poverty. And while I know I and other members, including our ranking members, support the authorization of the $3.28 billion U.S. contribution to the multilateral development efforts for these poor countries, it's particularly important given how our failure over the past several years to meet our obligations to the multilateral development banks has spurred doubt about the U.S. commitment to multilateralism. In response, a number of emerging economies, led by China, have begun to act independently, with initiatives viewed as a direct challenge to U.S. dominance in the global economic system, in a coordinated effort to reshape the global financial architecture. In fact, 2 years ago, China launched the Asia Infrastructure Investment Bank, the AIB, a new multilateral development institution which has grown to include 80 member countries. Beijing has mustered the economic and diplomatic strength to create China-centric institutions that parallel existing forums. So, I hope this legislation will reinforce the central leadership role of the United States in the global economic system and a renewed U.S. commitment to the international financial institutions which have long provided the foundation of a stable, rules-based international order. Unfortunately, this effort could be undermined by the Republican approach in this legislation regarding reforms, which may ultimately be counterproductive, specifically calling for the withholding of up to 30% of U.S. contributions to IDA in any year over a 6-year period in which the Secretary of Treasury cannot certify to Congress that the bank has adopted or is taking steps to implement 2 sets of reforms. The notion that the United States can impose its will unilaterally on the World Bank shows a misunderstanding about how multilateralism works. Achieving U.S.-led reforms at the MDBs has always depended on the ability of the U.S. to build coalitions among other stakeholders, which in turn relies on U.S. leadership within the institutions, relies on a sense of goodwill. These kinds of policy reforms should be advanced on their merits, not simply on the threat of withholding funds. And what's even more striking is that the withholding of U.S. funds would punish some of the world's poorest people, the people that we are obviously trying to help with this effort. Moreover, any funds the U.S. might withhold from the bank would become arrears that the U.S. would still owe. Currently, the U.S. has approximately $1.12 billion in previous unmet commitments to IDA. According to Treasury, these arrears damage the U.S. credibility and actually undermine our ability to advance U.S. policy objectives. Last week, in an important annual report to Congress on U.S. participation in the international financial institutions, the Secretary of Treasury stated, quote, "The United States needs to maintain its leadership position in the international financial institutions if they are going to be effective vehicles for supporting U.S. interests and responsive to U.S. calls for reform," unquote. So many on this side will support this bill because we need authorization for the U.S. to participate in IDA 18 replenishment. But like the bill itself, many will also condition our support going forward, namely on a more rational and a more even-handed approach to reform. Again, this is an important step in the right direction. I applaud the chairman of the subcommittee for his work on this and hope that we can continue to work together to find an approach that we all can be 100% behind. In the meantime, we'll support this moving forward.
Gentlemen, yield back. For what purpose does the gentleman from Arkansas seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I thank the chairman. Appreciate the bipartisan work led by my friend from Kentucky, Mr. Barr, on H.R. 3326. It's so important that we stay focused on accountability of our multilateral agencies, just as we do for how we spend taxpayer money here domestically. When I was a young staffer on the Senate Banking Committee in the 1980s, waste and lack of accountability at the World Bank was a topic. When I was at the Treasury in the 90s, waste and lack of accountability at the World Bank was a topic. So we find ourselves still struggling with how to have accountability and the best outcomes for the poorest of our countries that we work on a multilateral basis to help. I think Mr. Barr has the right approach here, which is a bipartisan approach over many years to demand accountability by the World Bank, demand effectiveness on a project-by-project basis at the World Bank, and emphasize quality and effectiveness over quantity, which is at the heart of what Mr. Barr's approach with H.R. 3326. I also want to say that on behalf of the Treasury Department, having this kind of support for accountability and stewardship of these dollars is very helpful to the Treasury Secretary and our appointees on the multilateral boards, including that of the World Bank, that the U.S., as an important, and in this case, largest voting member, just won't tolerate the same old, same old. So thank you, Mr. Barr, for bringing this to us so that we can be effective with our hard-earned taxpayer money as we try to support our colleagues across the world. And with that support, I urge my colleagues to vote for this, to support it. Thank him for his work and yield back my time to the chairman, subcommittee chairman. Do you need some time? Or?
Gentleman from Michigan wish time? Would you yield to the gentleman from Michigan?
I would yield to the distinguished chairman, former chairman of this committee, Mr. Hizanga.
I appreciate that from my colleague from Arkansas, and Mr. Chairman, I want to express my sort of strong support as well for my colleague's World Bank legislation, and I know firsthand how important this is for the World Bank to reform. This bill will help push the bank in the right direction behaviorally. Let me just speak briefly on one element of this bill that I would have particular experience with, and the ranking member and I had the opportunity to send a joint letter last July regarding this. But in Section 2, regarding the Uganda project, and in Section 2, you'll notice that the funds are being withheld from Treasury until it certifies this progress. Well, the Uganda Transport Sector Development Project that has been talked about here really brought this issue to a head. And as I had said, Ms. Moore and I had written Dr. Kim criticizing the bank's handling of this project, and the bank itself conceded that it had failed the beneficiaries and had promised to do better. Well, Mr. Chairman, actions speak louder than words, and the bank has taken certain steps to address the scandal, such as creating a gender violence task force and supporting the survivors of sexual abuse. Failures of this project needed to be a wake-up call for the bank more generally, and it failed to implement policies that put it in place to prevent such horrors in the first place, and frankly, it dragged its feet responding to Ugandan complaints about the sexual abuse in the first place. And so, you know, we have to make sure that there's not just a focus on churning out loans for the sake of churning out loans, and frankly, at the expense of proper oversight after that money has been lent. You know, this needs to be about quality, not quantity, coming out of the bank. And either way, we need to make clear to the World Bank that local and/or institutional management ineptitude on this scale is unacceptable and mustn't be allowed to recur. And Treasury continues to monitor the bank's actions to remedy the Ugandan failures. Congress must make clear that cosmetic changes won't be enough, that task forces, frankly, aren't enough. Either bank staff implements the policies that it has in place to prevent such abuses, or that staff has no place at an anti-poverty organization. So I want to thank the gentleman from Kentucky. I want to thank my friend from Wisconsin. This is a tough bill on the World Bank, and frankly, it should be. It may mean potentially fewer resources for the institution, but the bill is tough for a reason, and that's because the human toll is too high. The organization will be choosing to diminish its own resources if it does not implement those changes, and they undermine themselves. And some are concerned about the standing of our standing in the world. But, Mr. Chairman, this is about effective use of tax dollars. And I think some of those folks that have been cited, China in particular, may learn the hard lessons that we have as well about effectiveness. It's just time that the World Bank demonstrates achieved results for the world's poor, not political and economic elites.
My time's expired.
Time of the gentleman from Arkansas has expired. For what purpose does the gentlelady from New York seek recognition?
I move to strike the last one.
Gentlelady is recognized for 5 minutes.
I yield to Ms. Moore.
Thank you so much, gentlelady, for yielding your time. And just want to weigh in again and thank Mr. Barr for pushing us to do what our duty and to do this replenishment. I know how passionate the gentleman from Michigan was when he was the chairman of the subcommittee, and talking particularly about the Uganda project. And I think I can't say it better than he has said it, that accountability is more than just withholding money. It's actually being there, staying engaged, being at the table. I just want to remind my colleagues that the United States has been the big kids at the table who has brought about more accountability and transparency and reform by being there and being engaged and being the biggest donor. Just last week, for example, we created a delay in a vote, and finally that vote came out in our favor of not having the bureaucrats inside of the World Bank sort of cut out the inspection panels with regard to their ability to weigh in on a project at the beginning of the project and not once the project was in coat, as an example. Certainly, I believe that, that while we have delayed funds and monies for the Ugandan project very effectively to force them to make reforms regarding gender violence, the point of it is that our engagement, our being there is what really is going to make the difference in preventing these kinds of abuses in the future. Certainly, as an example, and you'll remember this, Mr. Uzengo, our concern about water, our concern about the corruption, about overcharging for water, and nothing is more critical and vital for a community, I would say, than making sure you have clean water that is not at usury rates. These are the kinds of accountability measures that we're able, as the big kids at the table, that we're able to secure and make sure that they happen. And in fact, you know, just as a point of personal privilege, this is why I sought the ranking membership of this subcommittee in particular, because I think that this is just one of the sharpest tools in our toolkit vis-a-vis our military power in the world to be able to maintain the hegemony of the United States of America in the world. And I certainly appreciate working with Mr. Barr from Kentucky. Thank him for his stewardship over this. But I just want I want to thank Ms. Velasquez for yielding this time, because I just want to make sure that when we start talking about accountability, we're not just talking about money. We're talking about the role we play in the world. And money is the ways and means that we get to the table as the big boys. And I would yield back to Ms. Velasquez. Thank you.
Mr. Chairman, I yield back.
Gentlelady yields back. For what purpose does the gentlelady from Utah seek recognition?
Strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. And I, too, would like to weigh in on this very important issue and thank Subcommittee Chairman Andy Barr for bringing up this important reform legislation, World Bank reform legislation. Over a series of hearings in Monetary Policy and Trade Subcommittee, hearings that have been held regarding accountability of multilateral development banks, we've heard some worrisome testimony about the pressure to lend that the World Bank staff face. As Congressman Barr explained, in the culture of the bank is that the staff are assessed by the volume of their lending rather than by the impact of that lending on development or on the sustainability of the outcomes. Meanwhile, the bank has embroiled in many human rights controversies involving everything from forced displacement of the poor, widespread corruption, and even sexual exploitation of children. Regarding the latter, the scandalous Uganda transport sector development project has been criticized by both Republicans and Democrats on monetary policy and trade subcommittees. The basic lack of project oversight led to the sexual exploitation of underage girls, repeated harassment of female staff, and deficient safety measures that have resulted in 5 fatalities. Such abuses undermine the very mission of the bank. In theory, the bank has safeguards in place to prevent mismanagement and to exercise appropriate supervision over the project and prevent the kinds of abuses we've heard about. But the question is now this: how can we in the United States and here in Congress exert influence over the implementation of those safeguards to ensure that the IDA is actually fulfilling its mission to lift up the world's poorest and put them on a sustainable path out of poverty? H.R. 3326 is one such means. As the World Bank enters the 18th replenishment of IDA, U.S. leadership means demanding results and tough institutional reforms. The reform mandated in this bill address problems at the bank that have been documented by the bank itself for at least the past quarter century. The auditing requirements in H.R. 3326 derive from recommendations made by both Republican and Democrat witnesses at a March 2017 monetary policy trade hearing. By exercising the powers of the purse, Congress sends an important signal to the bank that we take our oversight of that institution seriously. Thank you, Mr. Chairman, and I wouldn't mind yielding any remaining time to the subcommittee chairman.
I thank the gentlelady, and I appreciate her words and her reform-mindedness on this. And I also think I hear my friends on the other side of the aisle, and I think I can take yes for an answer, and I appreciate their work on this, their collaborative, bipartisan work. I appreciate their comments and support for this legislation. I do have to just weigh in a little bit on how it is that the United States engages in supporting these reforms, and the withholding provision that maybe raises some concern on the other side of the aisle. I would just say that this is how this is the mechanism by which the United States demands results and exercises leadership and supports reforms. It's not that we're disengaging. It just means that we are demanding results for the poor. We are demanding better outcomes. We are not going to tolerate, as a country and as the largest shareholder of the World Bank, the kind of malfeasance we saw in the Uganda case. And so U.S. leadership at the World Bank means insisting on project results, and this is not unprecedented. This is the mechanism that the United States has exercised before, and in fact, in 2005, the House passed the Foreign Operations Appropriations Bill 393-32, and that bill included a 25% withholding from the World Bank contingent on procurement reforms. Ranking Member Waters supported that legislation. And our Vice Chair's uncle, who is here, he supported that legislation, and I believe Ranking Member Moore also voted for this legislation. So the point is that this is how the United States can remain engaged and how we can support these kinds of reforms and prioritize results as opposed to just the volume of lending. And in the remaining time, I would just also add this. This institutes important reforms in the minds of the World Bank that the World Bank needs to prioritize counterterrorism and countering the narrative of violent extremism. That is an important reform as well. And with that, I yield back to the gentlelady, and I think her time has expired.
Time of the gentlelady has expired. For what purpose does the gentleman from Colorado seek recognition?
Move to strike the last word.
Gentleman's recognized for 5 minutes.
I'd like to yield to Ms. Moore.
Thank you so much for yielding. Do I have, Mr. Chairman, are you?
He's yielded you his time.
Okay. Thank you so very, very much, Mr. Perlmutter. And Mr. Barr, you are hearing that we plan to vote for this legislation and join you on it. I just wanted to add that I have a few concerns about this provision, and I don't think that some of the language accurately targets the problem on noncompliance, as I understand it. There's language in Section 73, opposition to assistance for governments that fail to implement or enforce measures required under an applicable United Nations Security Council resolution, specifically defined in Section 3 of the North Korea Sanctions and Policy Enhancement Act of 2016, which we talked about last week. It only targets IDA countries, the 77 poorest countries in the world. And so I'm concerned that we're penalizing the poorest countries, and that seems like a bad idea to me. And even in cases when we do want to be aggressive against the poorest country, so when it comes to sanctions implementation, I think we should at least consider moving towards assistance with conditionality first. We always have the conditionality as a toolkit. Secondly, which I think is very significant, the provision makes no distinction between countries that knowingly and willingly failed to implement the UN sanctions due to a lack of political will, and those countries that actually lack the capacity to enforce the sanctions. In fact, this is an issue that was raised at our subcommittee hearing last week on restricting North Korea's access to finance. So it seems like a race to penalization, particularly when there are developing countries that are desperately seeking help for technical assistance on implementation and struggling to do the right thing. So I think it might be a mistake to cut off development assistance for failure to implement without first committing more money toward technical assistance to help them do so. So, you know, I'm hoping that you'll just be open to some conversations about this. We can take a deeper dive, and so I can give you examples of what I'm talking about. And I would yield to you.
Thank you.
Yield to me first.
Oh, yeah, I got to yield to Mr. Perlmutter.
I would yield to Mr. Barr.
I thank my friend from Colorado, and I thank the ranking member for her comments, and I absolutely would be willing to work with you on that. I would note, just in terms of the statutory text and what we're talking about here, in Section 4 that relates to these IDA countries that have provided assistance to North Korea, that the language specifically says that these governments have to have knowingly failed to implement or enforce sanctions required under the applicable UN resolution. So there is a requirement that they be knowingly in violation of the UN resolutions. So that's what we're talking about here, is making sure we hold countries accountable who have knowingly violated UN security resolutions. That's really not, I wouldn't think, a debatable point. And also, we do afford Treasury discretion here by signaling in the statutory text that Treasury should instruct the U.S. Executive Director at the World Bank to use the voice and vote.
Sure. The gentleman speaking to the microphone.
Thank you. I'd like to reclaim my time and yield to Ms. Moore again.
Thank you, sir, Mr. Perlmutter. Just knowingly, but also just having the capacity, I just want to discuss that with you further because I appreciate the knowingly part, but willingly, just want to maybe add that and yield back to Mr. Perlmutter.
And I yield back to the chair.
Gentleman yields back. Who seeks recognition? There being no further discussion or amendments to the bill, the question now occurs on adoption of the substitute amendment offered by the gentleman from Kentucky. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. For what purpose does the gentleman from Kentucky seek recognition?
Ask for a recorded vote.
The bill, recorded vote. A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up House Resolution 442. The clerk will report the bill, which was distributed in advance.
HRS 442 of inquiry directing the Secretary of the Treasury.
Without objection, the bill is considered read and open to amendment at any point. I will begin by... Chair recognizes the vice-ranking member for gentleman from... Okay, for what purpose, gentleman from Colorado? Gentleman's recognized for 5 minutes.
Thanks, Mr. Chair. We're considering Resolution 442 because the Treasury Department has failed to acknowledge or supply information pursuant to our letters of March 10th and May 23rd, 2017, which I'd like to introduce into the record.
Without objection.
During the previous administration, the Obama administration, the chairman routinely demanded responses to letters and even threatened the Treasury Secretary Lew with subpoenas for failing to comply with various requests. Our current Treasury Secretary appears to be shielding President Trump, and we've offered our privileged resolution of inquiry to obtain the information Americans deserve, and more importantly, to provide checks and balances that the Congress offers as part of the separation of powers among all of our branches. It is my belief the President has something to hide when it comes to his financial dealings with the Russians. My suspicions were raised over the weekend as the President has threatened to fire not only Mr. Mueller, the special counsel, but also his Attorney General, Mr. Sessions, because of the probe into Mr. Trump's and his family's financial dealings with the Russians. The President's own son, Eric, has previously stated that Russians make up a pretty disproportionate cross-section of their assets, adding that they see a lot of money pouring in from Russia. It's our job to stand up for our democracy and to ensure our President cannot be compromised by the Russians and that he stands up for American interests and not those of Russia or Mr. Putin. The 1990s were not kind to Mr. Trump or his financial empire, as he was over-leveraged with hundreds of millions in personally guaranteed debt. Coincidentally, the Soviet Union was collapsing and billions in former state-owned assets began flowing to Russian oligarchs and government officials. The money began flowing out of Russia just as Mr. Trump's creditors were seeking repayment and he needed a bailout. Fortunately, one of the more popular destinations for Russian money was Trump Tower and his casinos. Trump welcomed the Russians with open arms. We want to see how this network has unfolded. We need to see the transactions that occurred between Russia and the Trump organization. We need to see the President's tax returns. Now there is a full-blown investigation which the White House appears to want to thwart. It is the responsibility of this committee and the Congress to act as a check and balance to understand precisely the relationship between the Russians and President Trump, his family, and his close circle. I would rather be talking about better jobs, better incomes, better future for America. I'd rather be talking about the World Bank, as was previous discussion. But clearly we have something afoot in this country that leads right to the top. And it is a responsibility, whether you're a Democrat or a Republican or libertarian, whatever you might be, to make sure that this nation isn't under the thumb of another nation because of financial leverage or whatever it might be. And as a consequence, we ask that this committee pass and forward HRES 442 so that, as a Congress, we look into these financial dealings, whether it's with Deutsche Bank, Russia, whatever it might be, to make sure there is nothing nefarious and not leave it simply to an outside investigation by the Justice Department. With that, I yield back to the chair.
Gentleman yields back. Who seeks recognition?
Mr. Chairman.
What purpose does the gentleman from Georgia seek recognition?
Strike the last one.
Gentleman is recognized for 5 minutes.
Mr. Chairman, first I want to thank the ranking member for putting forth this resolution, this privilege revolution. And I truly believe that is something that, whether we like it or not, every Republican and Democrat member of this Congress is going to have to eventually deal with, especially us here in the Financial Services Committee, because this resolution is just simply asking us to give us an opportunity to do our job. This is why we have this resolution with the Treasury. First of all, our Financial Services Committee has the oversight responsibility of the Treasury Department and FinCEN. Secondly, the Treasury Department is already collecting this information, as Treasury told our Financial Services Committee just 3 months ago. And third, Treasury has a database of more than 200 million Bank Secrecy Act filings. Now, all of that is why we technically have a responsibility. But, Mr. Chairman, our history as a great country has been overcoming critical threats to the welfare of our nation. Now, I don't know what the president has or don't have. That is not my issue. My issue is this: no man is greater or bigger than the people of the United States. I love this country, Mr. Chairman, as I'm sure everyone on this committee. But this ball is in our court. We're in play. We can't remain silent, because as long as this Russia investigation is going on with our president, it is the American people who are suffering. We have 21 veterans committing suicide every single day. But no mention of that. We have an opiate crisis of resounding consequences to the future of our young generation. Nobody's talking about that. We're talking about Russia having this undue influence. And no matter how we look at it, they are over in Russia right now. Putin is over in Russia, grinning from ear to ear. Why? I can just imagine him being able to talk to his cronies and say, look at the United States. Man, we got them tied all up in knots. We got them tied up in a massive ball of confusion and infighting. It has to stop. It's going on too long. We in this committee, all we're asking is for Treasury to present to us with this information and let us as members of Congress stand up for the American people. They deserve for us to be talking about jobs, job training, the crises that are moving throughout this nation. And so I hope we can do this in a bipartisan way and make the nation proud.
Time of the gentleman has expired. Who seeks recognition? For what purpose does the gentleman from California seek recognition? If the gentleman would turn on his microphone, he'll be recognized for 5 minutes.
The last 6 months, our country has had as pro-Russian a policy as the president would dare. We recently announced that we're really dropping any efforts to undermine Assad, who's killed almost 500,000 of his own people. We have a president who reveals intelligence in the Oval Office to the Russian foreign minister, and a president who has sought to undermine sanctions against Russia. Of course, he wasn't, it looks like he will not be successful at that. We have a president who proposed a cyber working group with Russia, an idea that can only be compared to asking Bonnie and Clyde to look at the security plan of each bank and issue a report. Americans have questions. They deserve answers. Are these actions and so many others an honest belief of the president as to what is in our national interest, or are they influenced by undue influence that Russia has over the Oval Office? We've had the FBI investigate this, and we've seen that investigation obstructed. Now this committee can do its part, and we should not be obstructed. We should do our job because the American people have a right to know whether their president is acting in their interests or is unduly influenced by a hostile foreign state. And that is why I would hope members on both sides of the aisle would vote to have us do our job, to get these records, and to see whether the president's extensive business interests. Keep in mind that prior Congresses have looked very carefully at the foreign business relationships of Andrew Mellon and others who have served in high-ranking positions in our government, but also had extensive contacts with and extensive business involvements abroad. And it is not unprecedented. It is proper. It is appropriate if we're going to remain an effective country on the world stage, we can do so only if the American people are unified, and that can be achieved only if the American people know that every effort has been made to answer their questions and to assure them that it's our White House, not the Kremlin's. So I would hope that members on both sides would support this effort, and there's tremendous benefit to assuring the American people that Trump's financial ties to Russia are not of great consequence, and there is harm done to our country if the members of this committee vote to cover our eyes, cover our ears, and fail to do the investigative job that the country expects. Is there any member who I should yield the rest of my time to? Seeing none, I yield back.
Gentleman yields back. For what purpose did the gentlelady from Wisconsin seek recognition? Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, colleagues. We've just had a very vigorous conversation about oversight over the World Bank. We've talked about corruption, the appropriate stewardship over the American taxpayer dollar, and now it's just sort of mum when we talk about the financial, perhaps, compromise that has occurred in our country. You know, I want to say to you, Mr. Scott, that I remember 1957, the World Series between the New York Yankees and the Milwaukee Braves, and not because your brother-in-law, Hank Aaron, was a champion during that time, but because it was one of those times when I was flying underneath my desk when I heard that the Yankees had beaten the Braves and fearing that the Russians were coming to get us. That's how long I've been personally afraid of the Russians. And for us to just sit here glibly and not be concerned about whether or not our country is compromised, when I just think of the list, the cast of characters that are involved, not just the president and his family, but Paul Manafort and Rona Graft and Rob Goldstone and Boris Epstein and Michael Caputo and Michael Flynn and Jeff Sessions and even our Secretary of State, who signed a multi-billion-dollar agreement with Russia in 2011 on behalf of ExxonMobil for oil drilling project in the Arctic, and Wilbur Ross and Carl Icahn and Felix Sater and Gary Cohn and Carter Page and Roger Stone and Rick Gates and Michael Cohen, and now I know better. I mean, I know that if I dash underneath this desk, that it is not going to make me more secure. I would yield my time now to Mr. Perlmutter.
Thank you. And I mean, I think from just a political science perspective, whether you're a Democrat or Republican, looking at the fact that Mr. Comey was fired, that Mr. Sessions is beleaguered, as the president said yesterday, Mr. Flynn had to leave the office of the National Security Advisor, Mr. Mueller's job as special prosecutor has been threatened, that the president said he's going to pardon himself and everybody else, we better take a good look at what's going on. I'd refer my friends to the memo that was done for Ken Starr about whether or not pardons are appropriate in these kinds of settings. But we do know, and we've heard recently in intelligence reports as well as in national TV, the Russians appear to be helping the Taliban, the Syrians, the North Koreans, and we're sitting idly by? That's crazy. We've got a responsibility to the people of this country, whether we like it or not. I'd yield back to my friend from Wisconsin.
And I do thank the gentleman. We can't we can't run up under the desk and be protected by this if, in fact, certain illegal financial schemes and related information they appear to be impairing our ability to deal appropriately and to sanction them for what they've done. The Justice Department under Mr. Sessions has been totally inadequate in doing anything about the Russian scandal. So this would direct the Secretary of the Treasury to provide documents to us within the department's possession, including those held by the Financial Crimes Enforcement Network, pertaining to Deutsche Bank's Russian mirror trading scheme, which ran 2011 to 2015, and other activities. And I think that, as many have suggested, this is within the scope and purview of our committee, and the 4 ranking members of our subcommittees, including the ranking member of our committee, will continue to pursue requesting these documents.
Time has expired. For what purposes the ranking member seek recognition?
I move to strike the last word.
The gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. My colleagues and I introduced this resolution to gather information related to the financial and business dealings of President Trump, his immediate family and his associates, as well as their potential financial ties to Russia, and to uncover any evidence of illicit activity that may have compromised the president and this administration. Specifically, the resolution directs the Secretary of the Treasury, Steve Mnuchin, to provide the House of Representatives with documents in his possession relating to the following: any foreign financial accounts of the president, his family, and his associates, credit extended by or involving Russian banks or Russian government officials to the president, his family, his associates, his properties, and businesses, any money laundering violations involving the president, his family, his associates, his properties and businesses, and properties owned by the president's son-in-law, Jared Kushner, any violations of U.S. sanctions, the Foreign Corrupt Practices Act, or the Logan Act by the president, his family, or his associates, any rule developed by the Treasury Department's Financial Intelligence Unit, the Financial Crimes Enforcement Network, to identify financial transactions involving prominent Russian political figures, the president, his family, and his associates, international information sharing requests with foreign financial intelligence units, including Cyprus Financial Intelligence Unit, related to financial transactions of the president, his family, or his associates, Deutsche Bank's Russian mirror trading scheme, and finally, the Russian laundromat, also known as the Global Laundromat or the Moldovan scheme. While the intelligence committees reached the conclusion that Russian President Vladimir Putin ordered a campaign of cyber attacks to undermine the 2016 U.S. presidential election, a number of questions remain regarding the extent of Russian leverage over this administration. It can only be uncovered by following the money. We don't know, for example, whether the hundreds of millions of dollars in loans Deutsche Bank extended to Trump under highly unusual circumstances were in any way guaranteed by Russians, or whether he or his family members were involved in or connected to potentially large-scale illicit financial schemes. We need to understand why the president refuses to release his tax returns, why he warned special counsel Robert Mueller to keep this investigation away from his personal finances, and why he feels the need to declare that he has the complete power to pardon his aides, his family, and possibly even himself. This is about finding out why so many of the president's associates and even his family members have repeatedly hidden and then apparently mischaracterized the nature of their contacts with the Kremlin, connected officials, and Russian peddlers of influence. This is about finding out whether our president is potentially compromised and whether he's acting unequivocally in the interests of the American people. The Financial Crimes Enforcement network within the Treasury Department known as FinCEN is charged with collecting, analyzing, and disseminating financial intelligence. In testimony before this committee in April, FinCEN reported that it maintains more than 200 million Bank Secrecy Act filings in its database, which include records of suspicious activity, currency transaction reports, and information obtained through information sharing arrangements with foreign financial intelligence units. This information is precisely what is needed to begin answering the mounting questions surrounding this administration. Unfortunately, our letters calling on Treasury Department and Deutsche Bank to help us follow this money trail have gone unanswered. This has led us to the point where we are here today. We are taking legislative action to finally get a response from this administration. My Democratic colleagues and I are committed to getting answers, to protecting our democracy, and to furthering the public interest. I sincerely hope my Republican colleagues are as troubled by the revelations that have come about this president, and I hope they will join us and support the resolution. I understand Mr. Mnuchin is supposed to be before this committee, and if we don't take the time to say, forget about everything else, let's focus on whether or not you have information that will help us to understand this president, his financial connections, and all of the money laundering possibilities that have surfaced as people have discovered more and more about not only this president, his connection to Putin, to the oligarchs, and to the Kremlin. And so this is very serious, and I know that there are those who would rather not have us talk about this, but it is time for all of us to stand up for the democracy. This Kremlin, this Putin, and Russia attempted to undermine our democracy, interfering with our elections. Republicans, what are you going to do about it?
Time of the gentlelady has expired. Who seeks recognition? For purposes, the gentleman from Illinois seek recognition.
Strike the last word.
Gentleman is recognized for 5 minutes.
Yeah, I have found personally that one of the most effective psychological defenses against the chaos that's happening in our country right now is to try to put this into a historical perspective. And to help me do that, actually my wife and I spend a certain amount of time listening to historical videos, of which there are a number of very high quality videos out there on YouTube and other places. And one of the best ways to understand this threat to our country and to our democracy is to study or reacquaint yourself with the history of Tsarist Russia. That, it is routine, had been routine for generations under the time of the Tsars, for the Tsar's family, the Tsar's advisors, the high councils, whatever was, whoever had the real, reins of power in Tsarist Russia, to routinely take foreign payments in return for actions that went directly against the best interests of the Russian people. And this was not a small part of why the Tsarist empire fell, with very horrible consequences for the Russian people. But take a while to study that history, and you will recognize again and again the parallels to what is happening in the Trump White House. That's one small suggestion to try to help us get our mind around what the real threat is here. That's what I had to say, and I will yield back at this point.
Sorry, to the time of the gentleman is expired. Who seeks recognition? For what purpose? Gentleman from New Jersey seek recognition.
Thank you, Mr. Chairman. I would like to yield my time to the ranking member. Or do you want it? Or
well,
I yield my time
much.
to Mr.
Yes,
Kildee. Did you want
absolutely. We have a lot to talk about, and this resolution is extremely important. I'd like to talk about some of what we know about Trump's associates' involvement with Russia, according to press reports. Let's start with Donald Trump Jr. Trump's oldest child works as a trustee and executive director of the Trump Organization, overseeing his father's assets during his presidency. We know that he organized a meeting with a Kremlin-connected lawyer who offered to provide damaging information on Hillary Clinton in order to further the Russian government's support for for the Trump campaign. He met with Fabian Bassart, a leader of a Syrian opposition group backed by the Russian government, and others about how the U.S. could work with Russia on the Syrian conflict weeks before Trump was elected president. And he has also said in no uncertain terms, in speaking of his father's businesses, that Russians make up a pretty disproportionate cross-section of a lot of our assets. We see a lot of money pouring in from Russia. He said that. Jared Kushner, Trump's son-in-law, we now know that he obtained a $285 million loan from Deutsche Bank 1 month before the 2016 presidential election as part of a refinancing package for his company's property near Times Square in Manhattan, a property he bought from Shaget Levitz, the daughter of Levi Levitz, who is one of the world's wealthiest men and known as the King of Diamonds for his extensive holdings in Africa, Israel, and Russia, and who has been quoted as saying he was a true friend of Vladimir Putin. Kushner also met with Michael Flynn and Russian Ambassador Sergei Kislyak in December 2016 and met with Sergei Gorkov the same month, the Putin-appointed chairman of the Russian state-owned bank, or VEB, that it is known as, possibly to acquire Russian financing to renovate his family's over-leveraged office tower at 666 Fifth Avenue. We know that in May it was reported that the FBI was investigating whether Russian officials might have suggested to Kushner that favorable financing arrangements might be available to Trump confidants in exchange for the relaxation of sanctions. It was recently revealed that Kushner also joined with Donald Trump Jr. and Paul Manafort to meet a Kremlin-linked lawyer in June 26 to obtain incriminating information on Hillary Clinton, and he failed to disclose these meetings on his security clearance forms and reportedly has been identified as a person of interest in the ongoing FBI investigation. Let's take a look at Paul Manafort, Trump's former campaign manager. We know that Mr. Manafort was formerly a paid lobbyist for pro-Russian Ukrainian politician Viktor Yanukovych. He reportedly signed a $10 million contract in 2006 with Russian billionaire and Putin ally Oleg Deripaska to advance Putin's interest in the United States. He reportedly tried to hide a $750,000 payment from a pro-Russian party in Ukraine. He is reportedly under FBI scrutiny for possibly role in money laundering by Yanukovych. He registered as a foreign agent for previous work in Ukraine. He met with a Russian lawyer, along with Donald Trump Jr. and Jared Kushner, to obtain incriminating information about the Democratic presidential candidate, Hillary Clinton. And he is reportedly under investigation by special counsel Robert Mueller for his role in potentially coordinating with the Russian government in the 2016 presidential campaign. Let's take a look at Ronna Graff, Trump's personal assistant, nicknamed Trump's right hand, a gatekeeper and a back channel to Trump, who has worked for Trump for nearly 30 years in roles including media liaison, scheduler, fundraising planner, and apprentice co-star, and who reportedly remains an important conduit for high-profile people who want to contact Trump outside his regular hours. We know that she has also mentioned in emails as a possible conduct for information from the Russian government aimed at incriminating Hillary Clinton, and that was the basis of a meeting held by Donald Trump Jr. and other Trump associates. Rob Goldstone, a British publicist who organized a meeting between Donald Trump Jr., senior Trump campaign officials, and a Kremlin-connected lawyer, which promised to provide information that would incriminate Hillary Clinton. We know that he has described Moscow as his second home. He remains a close connection to a powerful Kremlin connected Russian family. And so there's a lot more, and even though if it doesn't come out today, drip by drip, it is coming out.
Time of the gentleman has expired. For what purposes? Gentleman from Michigan seek recognition.
Strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. You know, I'm one of the members that have felt that we spend too much time on this question, that we really distract ourselves from other really important questions and really big issues that the American people would much prefer that we work on. But we really don't have the choice as to whether we're going to exercise our responsibilities, our constitutional responsibilities, and we have a responsibility of oversight over this administration that we have to exercise. We don't get to pick and choose. So as we have seen in the last 6 months, a constant stream of revelations about these ties to Russia from the Trump administration to officials, oligarchs, organized crime leaders, they raise serious questions that we have to find answers for. Are his immediate family members, is the president or his associates ultimately under the influence of these foreign operatives? And does that raise a question as to whether or not the president and those around him are acting in the best interest of the American people? He has maintained he has no investments in Russia. We would have to take the president at his word if we were to accept that, something that I have found impossible to do given his history of obfuscation and outright lies. His own son has said that, quote, Russians make up a pretty disproportionate cross-section and a lot of the Trump assets, adding that he sees a lot of money pouring in from Russia, unquote. And of course, the President Trump's biggest lender and the only bank known to continue to loan to him after his serial bankruptcies is Deutsche Bank. Trump's now reportedly amassed approximately $340 million in outstanding loans. This raises serious questions, not only about the bank's exposure to higher risk given President Trump's history of defaulting on his debts, but also conflicts of interest, given that the president is responsible for selecting federal banking and Justice Department officials who are responsible for overseeing the bank and holding it responsible or accountable for any violations of law. His extensive ties to the bank are also concerning, given the bank's involvement in major illegal financial operations involving Russia. We can't ignore this, even if we want to. We can't ignore it. So beyond the continuous stream of revelations on this issue is the lack of transparency by President Trump. And that is why we end up having to spend so much time on this. We ought not have to spend so much time getting answers that the American people should be demanding of us. We need to get this information. We have a right to this information. The Congress needs to act, and that's why I support this effort. Now I would like to yield my remaining time to my friend from Colorado, Mr. Perlmutter.
Thank you. And just a couple more points. I talked about Afghanistan and the Taliban, the Syrians, the North Koreans, and Russia's role with respect to those countries, but I forgot Ukraine. And today, in the Washington Examiner, not known as a liberal newspaper, the headline and the opinion, Trump just played straight into Vladimir Putin's hands on Ukraine. This is big and serious stuff. We spent, as a Congress, some $37 million investigating what occurred in Benghazi. We should spend every bit of that and a lot more to figure out what these connections are. Because whether it's family member or close associate or some cabinet members, it appears that all roads lead to the president and all roads lead to Vladimir Putin. And the threats against the FBI and their heads, and the threat against the Attorney General, who was a close associate of the president, smacks and reminds me of the Midnight Massacre in the Nixon administration. And I'm looking at my friends on the Republican side of the aisle because they are my friends. And I know this guy's the head of your team. But we have a responsibility independent of our positions as Democrats and Republicans. And I'd ask my friends to really take a good look at this resolution and to vote for it. With that, I yield back to my friend from Michigan.
Thank you, and I yield back my time.
Gentleman yields back, who seeks recognition. The chair recognizes himself. Number one, it's been quite clear that the ranking member started the impeachment caucus before President Trump was even inaugurated. Rarely does a day go by that we do not hear the cries for impeachment. Again, if my friends on the other side of the aisle wish to talk about Russia and impeachment, that is their right. We on our side of the aisle will continue to work on jobs and hope and opportunity and focus on America. Next, I don't recall, I might take this a bit more seriously, had I recalled even one instance in the last 8 years when my friends on the other side of the aisle called for any investigation during the Obama administration. I don't recall one instance whatsoever. Next, for those who are concerned about our policy vis-a-vis Russia, I have good news. That is why the House will consider legislation this very afternoon to impose new sanctions on Russia, and that the President obtain congressional approval before easing any sanctions on Russia. Congress is asserting its authority and acting as a check on the executive branch. Finally, when it comes to policy in Russia, we all recall from the infamous reset of the Russian button in early 2009, just months after Russia invaded Georgia, to its removal of missile defense systems in the Czech Republic and Poland later that year, to ignoring Russia's violations of the 1987 Immediate Range Nuclear Forces Treaty, to ceding ground in Syria to Russian military intervention, the Obama administration's Russian policy, as one commentator put it, was, quote, one protracted 8-year-long concession to Moscow. Perhaps that would be a more appropriate opportunity for investigation. Finally, speaking of investigation, as we all know, the House Intelligence Committee, the Senate Intelligence Committee, the FBI, the Special Counsel are all conducting investigations into the very serious matter of Russia interference in our last election. And this committee will not be spending time or resources to duplicate the investigation that is already underway by those who have full subpoena power and investigation power already. Did the gentleman from New Mexico wish?
Yes.
Okay, I yield to the gentleman from New Mexico.
Thank you, Mr. Chairman. I would repeat my friend from Colorado's request, and I consider the gentleman my friend, that we contemplate very seriously what is being suggested here. The BSA records are a security tool. They are law enforcement records. They exist and can be looked at any moment by the law enforcement agencies. But if we in Congress are going to start receiving and summarily releasing those records, some say for political purposes, there might be some dissection of that comment, but understand they will eventually be used for that. And the information that we have received in our top secret briefings with the TIF committee should cause great concern about the approach to releasing these BSA records. These are not just casual things that are available. In the Manchester bombing, 60% of the information that came out was unknown previously to the law enforcement agencies themselves. Before we take this step, I urge you to contemplate it in the deepest levels of your heart. I would yield back the time to the chairman.
I thank the gentleman for his comments. The chair yields back to himself. There being no further discussion or amendments to the bill, the question now occurs on ordering the bill reported unfavorably to the House. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. The ayes have it.
Recorded vote is requested.
Recorded vote has been requested. All those in favor of recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. The chair will presently recess, subject to the call of the chair. The chair anticipates we will reconvene immediately following the second vote series on the floor at approximately 5:15 this afternoon. The committee stands in recess.